Having a good plan on how you're going to structure your risk when it comes to trading with prop firms is very important. And then sticking with that plan overall. What I mean by this, I had a gentleman ask me, I have people ask all the time, how long does it take somebody or me or anybody else to pass a combine? And I usually respond with a kind of vague, answer. It takes a wildly varying amount of time. It can take somebody 2 days, the shortest amount of time that'll take you to pass a top step combine, or it could take you 2 months. It could take you longer than that. What is important when you're asking that question is how aggressive is that person going to trade that combine? If you buy one 50K combine and you say, this was a lot of money for me and I don't want to fail this. I want to try to pass it within a month, maybe 2 months. Hopefully with Top Step, I'll get a free reset like they gave out yesterday where you can start from scratch and reset your account. It doesn't move your rebuild date, but it does give you a second chance. And I don't want to really risk blowing this account. You're probably going to approach it with a much more conservative approach to risk management. You want to give yourself quite a few losing trades without blowing that account. And maybe you'll be able to hit your goal in a month or 2 months, risking a much, much smaller amount. Maybe it's $50, $100 per trade that you're looking at risking. Maybe on the other side of that, and why it's important to understand how aggressive someone's going to be, maybe someone's going to buy a dozen 50K combines. Maybe they're not that much money to you, $50 or $20 or $30 like they have been for the last few weeks and even a couple months, I think. And you're happy buying 12 of them, and you're going to trade them very aggressively. You're going to risk $500, $1,000 per trade with the goal of passing them very quickly and potentially blowing quite a few on the way to passing the ones that you're going to make to an XFA. Your game plan can be, here's my total investment, right, on these 12 accounts. My goal is to get funded with, let's say you're happy with 2 or 3 out of those 12. You're going to do that very quickly because you're going to trade them very aggressively. Maybe you're going to pass 1 for every 3 or 4. Again, I'm not making a recommendation that you should do this. I'm not saying this is how I approach it. I'm just drawing a comparison here. And get to an XFA with the goal of having multiple XFAs to be able to trade those fairly aggressively, right? Because you made your investment, you got to the XFA stage very quickly. Now you can trade those. Maybe you end up with 3 or 4 of them. You can trade them knowing that you're likely to get 1 or 2 of them into profit, be able to take a payout, cover all of your expenses, and then some. And you did that in a very, very short amount of time because you have this money. Time is money. And you probably don't want to be spending, 2 months on a $20 combine, hoping to be able to pass and that type of deal. Have that game plan, write that out on a sheet of paper. This is your total business plan, right? Your trading plan. And there's nothing wrong with going one way or the other. This is different for everybody. Everybody's going to have a different initial investment that they're comfortable with. And then try to stick to that. That's where the psychology side comes in. That's where the mental side comes in, right? You make your trading plan. This is how I'm going to trade my combines. This is the risk management approach for each of them. Here's my limitations, maybe some guardrails that you're going to set for yourself. You should definitely have a clear risk management plan and then trade that plan. When it comes to the trading itself, a lot of times it's going to be more discretionary, more subjective as far as the entries and exits go. But I do want to emphasize the importance of knowing what you're getting yourself into and then sticking to that plan.